You see the setup. Structure is clean. Liquidity has been swept. Momentum is strong. It looks perfect. Everything aligns. This is the move you have been waiting for. Or you enter. And within minutes, it reverses, ups you out, then continues in your original direction without you. And you sit there thinking, I just had bad luck. There was not luck. It was not the market hunting you. It was not manipulation. It was not bad timing. It was FOMO. And here is the uncomfortable part. FOMO trading has very little to do with the chart. Because the chart can be clean. Structure be valid. The idea can be correct. The entry can still be emotional. What most traders call bad luck is often emotional urgency disguised as confidence. You did not enter because the setup confirmed. You entered because you could not tolerate watching price move without you. There is a difference. Today I'm going to break down why FOMO trading has nothing to do with the chart and everything to do with your identity. Why perfect looking setups trigger your impatience. Why urgency overrides discipline. And how to stop entering trades just because they feel too good to miss. If you have very entered early, if you have ever chased momentum, if you have ever felt the pressure of watching price move without you, this for you. Let's talk about what is really happening underneath your entries. Section 1. What FOMO really is. FOMO is not fear of missing a trade. It is fear of missing identity validation. You are not afraid of missing profit. You are afraid of being wrong. You are afraid of being left behind. You are afraid of watching price move without you. There is something deeper happening. As humans, we are wired for belonging. We are wired to survive in groups. We are wired to feel safe when we are not excluded. In trading, belonging becomes comparison. You compare entries, you compare profits, you compare speed, you compare results, and social media amplifies this. Every scroll becomes proof that someone else is ahead. Every screenshot becomes a reminder that you are not in the move. When someone posts a 50% flip, your nervous system reacts before your strategy does. Your body responds instantly. Heart rate shifts, attention narrows, urgency increases. And in that moment, logic becomes secondary, and you're no longer trading your setup. You are trading your insecurity. And that reaction is what makes you enter early. It is not the chart pulling you in. It is the discomfort of feeling behind. You tell yourself you do not want to miss the opportunity. But what you really do not want is to feel excluded from it. And that subtle emotional shift is powerful enough to override your entire trading plan. Section 2. Why the chart looks perfect before it breaks you. Now here is where it gets interesting. A setup can look perfect structurally. Higher time frame bias is clear. Liquidity is obvious. Momentum is aggressive. The market looks like it is about to explode. Everything might make sense technically, but your timing may be emotional, not technical. You anticipate confirmation instead of waiting for it. You convince yourself that this time it is obvious. You tell yourself the move will not retrace. And feel like if you wait, you will miss it. FOMO trading often happens before confirmation, not because you do not know the rules, but because you cannot tolerate waiting. Waiting feels like tension. Waiting feels like lost opportunity. Waiting feels like being inactive while others are moving, and your brain does not like that. Waiting creates discomfort. Discomfort triggers urgency. Urgency overrides discipline. This is the pattern. The candle starts pushing aggressively. You feel the pull. You skip one row, or you enter slightly early. You justify it because the setup looks clean. Then price retraces to the exact confirmation level you were supposed to wait for. The problem is not your strategy. It is your tolerance for uncertainty, because real confirmation requires patience. And patience requires emotional stability. Most traders do not lose because they lack knowledge. They lose because they enter to escape discomfort. And until you learn to sit inside uncertainty without reacting to it, the chart will continue to expose you. A market does not punish impatience. It reveals it. Section 3. The identity behind FOMO. Now we need to go deeper because FOMO is really about the trade. It is about who you believe you are without the trade. Let me ask you something honestly. Do you feel behind in life? Do you feel like you need a big win to catch up? Are you trying to prove something to someone? To your friends? Or your family? To social media? Or to yourself? These questions matter more than your strategy. If you feel financially behind, you will rush entries. If you feel small, you will force trades. If you feel invisible, you will chase momentum. As the trade becomes more than a trade, it becomes validation. It becomes proof that you are capable. It becomes evidence that you are not stuck. That is why FOMO feels urgent. It is not about missing pips. It is about missing identity reinforcement. FOMO is amplified by scarcity mindset. If you believe opportunities are rare, every move feels like the last one. It is amplified by comparison. If you constantly measure yourself against other traders, every chart becomes a competition. It is amplified by income pressure. If you depend emotionally or financially on this trade, your nervous system cannot relax. And it is amplified by lack of emotional regulation. If you do not know how to sit with discomfort, you will try to trade your way out of it. Here is the truth most traders do not want to admit. You are not chasing the trade. You are chasing relief. Relief from feeling behind. Relief from feeling broke. Relief from feeling average. Relief from feeling like you should be further by now. And when trading becomes a tool for emotional relief, discipline disappears. Because relief feels urgent. And urgency does not wait for confirmation. Section 4. The biology of FOMO. Now let us break this down biologically. When price starts moving aggressively, your brain predicts reward. It sees momentum. It imagines profit. It imagines the green numbers. And instantly, dopamine spikes. Dopamine is not the pleasure chemical. It is the anticipation chemical. It rises when your brain expects reward. So when you see a breakout candle, your brain says, this is it. Impulse increases. Logic decreases. Your ability to follow rules weakens. Your focus moves. Your body leans forward. Your mouth moves faster. Breathing changes slightly. Your brain treats a moving chart like opportunity leaving the room. It reacts as if something valuable is escaping. And the fear is not just losing money. It is losing possibility. This is why impulsive traders are not stupid. They are dysregulated. Their nervous system is activated. Their body is in pursuit mode. And in that state, discipline feels unnatural. This is why discipline is not about willpower. It is about nervous system control. If your nervous system is calm, you can wait. If it is activated, you will chase. Most traders try to fix FOMO by changing strategy. But the real solution is learning how to regulate your internal state. Because when your body is calm, your entries become, and when your body is urgent, your entries become emotional. The ROR did not force you. Your biology did. Section 5. Practical framework to stop FOMO. Now let us move from awareness to action. Understanding FOMO is powerful. But structure is what changes behavior. Here is a simple framework you can apply immediately. The pre-commitment rule before your trading session begins. Write your entry conditions down. Nose your head. On pen your journal. In your notes. Be specific. What confirms entry? What invalidates entry? What time frame must align? What candle must close? If there is no confirmation, there is no entry. This removes negotiation because most FOMO trades happen when you start bending rules mid-session. Pre-commitment protects you from emotional edits. You are deciding in a calm state what your rules are. And during the session, your only job is execution. The delay rule, when you feel the urge to enter early, wait 3 candles. 3 candles. Not 1, not half. If the setup is still valid after 3 candles, you can enter. If it is not, it was never your This rule exposes impulse. Because urgency hates delay. If waiting 3 candles feels unbearable, that is not opportunity. That is emotion. The delay rule trains patience under pressure. The emotional check rule before every entry. Ask yourself one question. Am I entering because my setup confirmed or because price is moving fast? Be brutally honest. Your body will know the answer. If your breathing is faster, if your mind is racing, if your justification sounds rushed, it is not confirmation. It is stimulation. This check creates a gap between feeling and action. And that gap is where discipline lives. Session intention. Before you open your charts, set a clear intention. Say to yourself, I am here to execute rules, not emotions, not to prove anything, not to catch every move, not to compete, just to execute. Intentions anchor behavior. When you begin the session from identity, not urgency, your decisions stabilize. Track FOMO, trades separately. This is where most traders avoid responsibility. Start labeling FOMO trades. Create a column in your journal. Mark it clearly. FOMO, do not hide from it. Track the outcome. Track the emotional state. Track the rule you broke. And then look at the data after 2 weeks. You will see a pattern. And patterns remove denial. Awareness reduces impulse. Because once you see how much FOMO costs you, the illusion weakens. You stop romanticizing the chase. Section 6. Reframing missed trades. Let us talk about missed trades. Because this is where FOMO really lives. Missing a trade is not losing money. Breaking your rules is. There is a difference. If a setup runs without you because you waited for confirmation, that is discipline. If you enter early and get stopped out because you rushed, that is damage. Professional traders miss trades daily. They let moves go. They watch breakouts without entering. They accept that not every opportunity belongs to them. Amateurs chase them. They believe every move is theirs to capture. They believe missing one is failure. Do not need every move. You need your move, the one that aligns with the one that confirms, the one that fits your plan. Trading is not about catching everything. It is about repeating what works. When you truly accept that the market owes you nothing, urgency fades. When you truly accept that another setup will come, pressure decreases. When you stop measuring yourself by how many moves you catch, you regain control. And when you truly accept that, because you are no longer trying to extract validation from every candle, you are simply executing your edge. Section 7. The long term. Here is the long-term truth most traders avoid. The market will be here tomorrow. Discipline may not. There will always be another setup, another breakout, another liquidity sweep, another opportunity. But if you keep reacting emotionally, your confidence erodes. If you keep trading from urgency, you will stay stuck in cycles. When overconfidence, loss, rejection. That cycle is not technical, it is psychological. Consistency is built by protecting capital and protecting psychology. Capital is obvious. Psychology is not. Every impulsive entry chips away at trust in yourself. Every rule you break weakens your identity as a disciplined trader. And eventually you stop trusting your own plan. That is more dangerous than a losing trade. Peaceful traders make cleaner entries. Not because they are smarter, not because they have secret indicators, but because they are not trading from emotional deficiency. They are not trying to prove anything. They are not trying to catch everything. They are stable, and stability compounds. Stop trying to be fast. Start trying to be whole. As traders feel stable traders build equity. Your goal is not speed. Your goal is repeatable execution. And that only comes when your identity shifts from chasing moves to protecting process. Let this land. FOMO is not about the chart looking perfect. is about you not feeling enough without the trade. It is about needing the win to feel competent, needing the entry to feel relevant, needing the move to feel ahead. When you stop needing the trade, you start trading better. When you stop attaching your worth to the outcome, your entries become cleaner. When you stop chasing relief, you start following rules. That is the shift. If this made you uncomfortable, it means you needed it. If you are serious about trading from clarity instead of chaos, this channel is for traders who want emotional control, not just technical knowledge. And before you leave, comment one word: rushed or disciplined. Be honest, because awareness is the first step to